If you're feeling a bit worn out by the crypto market, you're not alone. For 138 days, Bitcoin has basically gone nowhere. Well, a little bit down. But as we get past the halving, things could change really dramatically. So we're going to look at short-term bullish and bearish momentum, not just inside the crypto market, but also we need to look at gold and silver because that gives us a great understanding of yields and the cost of money. And that will directly impact what happens with liquidity inside the crypto market, be it upwards or downwards. And don't forget, the FOMC meeting is coming in very shortly. There are always opportunities inside every single market. When we look at the crypto market, price is always moving in a wave. You can see it just playing out here. The last 24 hours, the last 7 days, and the last 30 days. Everything is up and down. This is normal. Bitcoin is currently 8% below its previous all-time high and is up just a little bit, 0.18% in the past 24 hours. The greatest gainers in the past 24 hours, Bitcoin Cash, Brett, Jup, Tron, Monero, Leo, Nexo, and XRP. We can see that they have not really come up that much except for Bitcoin Cash. The greatest losers across the past 24 hours, Not, Popcat, Helium, Sui, ENA, Injective, Ohm, and Near. We can see that there's just a bit over 4% to 6% in terms of losses in the top 100. Let's have a look at crypto opportunities. We know that no alt can escape Bitcoin's gravity. Bitcoin is this candlestick pattern that you can see in the background. You can see it a little bit more clearly right at the current time because the alts have been coming down, because there's negative price momentum on Bitcoin. You can see it very clearly here, how the alts move up and down with Bitcoin. Therefore, you must know Bitcoin structural levels, or else you cannot trade or invest in your particular crypto projects effectively. We can see the upper bank of Bitcoin's gravity. Bitcoin Cash is just romping it in, followed by Tron. Tron typically shines in the darkness, so this is probably one you want to keep your eye on. Not is not doing too well at the current time. Looking into the top projects, when we look at Bitcoin on a 2-hour basis, and we're here looking through from about the 29th to the 23rd. So we can see we had this retracement, a surge up, a pullback, and now what is cooking with Bitcoin? Could it be set to start to break out to the upside? If this is the case, we should see signs of life inside the alts. The alts always feel Bitcoin's gravitational pull either upwards or downwards. So please let me know in the comments, where do you think we're headed to across the next 24 hours? Are you bullish or bearish? And how do you think the alts will play out? Here we've seen Ethereum. When we look at Ethereum, if Bitcoin's price is coming down, of course Ethereum's price is coming down. Ethereum has been somewhat suppressed of late as the big holders, the big institutions, fill their bags. In terms of the spot Bitcoin ETFs, we're seeing positive flows in US dollars into those ETFs, 51.8 million, followed by 31.44, but it is quite low. Institutions absolutely love a bargain, and they love to force fear on the retail mindset. If you're seeing Ethereum come down like this, well, you know it's just Bitcoin's gravitational pull, but it's exerting more negative price momentum just currently. That is not by accident. When you look at Binance Coin, you can see the alignment. Solana, you can see the alignment. XRP has been all over the place. It's been inverting. But if I was to just zoom in here, you would see the overlap. Hey, why don't I do that? I'll show you. Here we're looking at the overlay of XRP and Bitcoin on a 15-minute chart. You can see that they are indeed following each other. Not perfectly, they don't need to follow each other perfectly, but on average, they're following each other. Now, what does this mean? It means that even though it may appear like Bitcoin and XRP have no relationship whatsoever, and a lot of people want that, but the truth is they always have a relationship, whether positive or negative, it's always there. Hence, when we look at a very close approximation to this XRP and Bitcoin relationship. When Bitcoin is going up, guess what XRP is doing? On average, it's going up. When Bitcoin is coming down, on average, XRP is coming down as well. It may not have looked like it, but it is a fact. What causes these different price patterns to emerge is actually structure. The structural levels of resistance and support play out inside each and every chart. It plays out inside Bitcoin. It plays out inside Ethereum, inside XRP, inside everything, inside Doge. You must be aware of those particular levels. They'll make you a fortune. If you're liking the content so far, please smash that like button. And please remember, all the structural levels of the Tier 1, Tier 2 and Tier 3 charts are available from ctksmethod.org. In yesterday's video, we were around this particular point in time. What happened next? Where did the structure play in and play out? You can see that structure was caught at that 67,519 area of structural support. I'll just go a little bit more slowly so you can see how structure plays out all the time. If you know where the structural support and structural resistance levels are, it's just like magic. You'll understand where the ceilings are and where the floors are. There are so many investor and trader misconceptions on how to relate to price. A lot of people say, oh, if I profit as a trader, I've cost somebody else money. That's not the truth. If you profit as a trader, you know what you're doing in that moment. Even if you're just learning, you've done something correctly. And if you've made a loss, there's just a lesson that the market is teaching you. That's it. Your profits show that you know what you're doing. Your losses show that you need to learn something. It's literally that simple. A lot of investors say, oh, I don't want to get in I don't want to disadvantage other people, so I'll just buy at market. That will look after other people. You're not looking after anybody. There's millions of bots inside all the markets. The markets don't care about any one participant. It is not a zero-sum game. When you look at structure, you can see where the ceilings are, and you can see that Bitcoin is making its way above that 68,156 ceiling. Now, what does this mean? It's good news. It means that we're now favoring the 69,778 level. We had a little bit of negative price momentum, but it was caught by this 67,519 structural support. That's why it's so important to know where the structure actually is. I hope this has unequivocally proven that price is always moving in a wave. It really depends on where you're situated, if the market went bullish or bearish. But we're certainly seeing a lot of positive momentum right at the current time. If you're expecting a bullish stance, you want to see a movement up to the 69,778 level. If we don't hold this 68,156, we're coming down to the 67,519 area, and we can sometimes overshoot it. You must always understand these are not brick walls. They're like safety nets. And if we start to go under this 67,519 level, we at least have this 66,961. Please let me know in the comments, do you think we're going bullish or do you think we're going bearish in the next 24 hours? It's a really good idea to look at the ecosystem plays. When we look at the Ethereum ecosystem, IQ is showing its brilliance out in front. Pond has jumped out of the pond and is the second greatest gainer. Real world assets are just being kind of crushed at the moment. They're not doing too well. What about gaming? Yep, it's pretty much underwater. Pond in the Solana ecosystem, and you can see one particular crypto could belong to any number of different groups, so just please bear this in mind. And side Solana, BOEM has been absolutely smacked around. It's the greatest loser in the top Solana ecosystem plays. Inside the service, BNB just currently is doing the best. What about AI and big data? GLM out in front, Theta leading up the back of the pack. In terms of the memes, Audi's out in front, if you could say that, and BOEM, just like inside the Solana ecosystem, is down the bottom. Sometimes reversal plays can be very profitable, but you have to know what you're doing. Just get into one particular thing and just perfect that as a trading or investing strategy. In distributed computing and file storage, Coin is going far, and ICP is leading the back of the pack. It's a really good thing to know your groups. In terms of the wallets, we can see that the wallets are basically down. 1inch is the best gainer, but it's kind of negative. ICP is the worst currently. In DeFi, LDO is up the top, ICP down the bottom. In DePIN, Coin and Pond are doing quite well. In Binance Labs, RD, NT, and Pond are doing well. Pretty interesting. You could say Pond's doing pretty well. In terms of centralized exchanges, they're all potentially just flatlining at the current time. What about the DEXs? Rune has been hit the worst and Synthetics is up the top. In terms of the Bitcoin ecosystem, BTG up the front, ICP down the bottom. Layer 2, it's just pretty much Bitcoin and Matic just close to the top, and SKL down the bottom. The thing to bear in mind, if Bitcoin's gravity increases, all of the alts get pulled along with that gravity. So this is something that you really want to pay a lot of attention to. Turning now to Ethereum structural levels, we see this 3246 level holding up quite well. We have a lot of structural support at that 3138. That's something to just bear in mind. Right now, currently, we're challenging and getting up to this 3296 structural resistance level. If we manage to flip that into support, that opens up the 3345 level and the 3395 level. We would expect the sellers to come in and seek to push Ethereum's price down around that 3395 mark. That's the bullish case scenario. If we do a bearish case, we would anticipate something that looked pretty much like this, an underside retest on the 3246 heading down to the 3138. In order to get a feeling on which way things might be going, just apply the methodology. If we get above structural resistance, we're heading to the next structural resistance. If we fall below structural resistance, we're heading to the next structural support below. It's really quite simple. It actually gives you 100% certainty on where things are headed to next. Where could Solana be going to next? Let's put on the structural indicator from the service and let's just have a look at what some of these values could be. If you're new into the crypto trading and investing arena, a very warm welcome, and just make sure that you understand, as Bitcoin is coming up, Solana is coming up. As Bitcoin is coming down, which is the blue line, Solana is coming down as well. As Bitcoin goes up, we expect Solana to come up as well. This is a very helpful thing to understand. If Bitcoin is coming down, expect your particular alts to be making their way down as well. If Bitcoin spikes up, expect your alts to spike up. If it spikes down, expect your alts to spike down. You get the idea. It's really important to know what Bitcoin is doing. And if Bitcoin is starting to break out, wow, that's pretty cool news. What you're going to find is that Bitcoin's gravity is really important, but what's even more important are the structural levels. You saw that Bitcoin just went gangbusters, but Solana hit a structural level at 182.57 and it flatlined it. When you understand the interplay between gravity, and that's Bitcoin's gravity, and structure, which are the structural levels inside the specific chart, it gives you an incredible edge in the market. A lot of people just think that the news will take them there. The news in the past 24 hours was absolutely undeniably positive, but Bitcoin and crypto came down. Just relying on the news will always wrong foot you. How can you say that? I've been inside financial markets for many decades and I used to trade the news but then gave it up because you just lose a lot of money by doing it. If you can relate to me, please drop a comment. It does take many years and a hell of a journey to understand how financial markets work. And the key is always structure. Gravity and structure. If you know these two things, you're going to be doing really well. Every single chart in every single sector in every single market has a structure. That structure, if you know it, you'll know where the support and resistance lines are. If there's a very heavy resistance line above here, we would expect total crypto market cap to hit it and then descend. But if there's a whack of support underneath here, we would expect that strong base would fuel a really good rally, especially if it's been consolidating. This is why, if you don't know the structure, you're in a world of hurt. Let's just pop on the indicator. Therefore, what is incoming in terms of total crypto market cap? We can see right up here at 2.41 trillion, there's structural resistance. We took this structural support line here and down here, and those have been playing in rather well. We actually just retraced from one key structural level down to another, and we've just gone midway and then just exploding up to retest this 2.41 trillion. That means that when the alts get up to here, when you compare total crypto market cap to your alts, watch this $2.41 trillion level. It's going to be important. Understanding your structural levels are incredibly important inside the crypto market, looking at total and looking at Bitcoin and then applying it to whatever you're trading and investing in is very important. But don't forget, Bitcoin is impacted by the VIX and the DXY, and the VIX and the DXY impact general market sentiment and then stock market sentiment. This is really important to understand. Everything is an intercorrelated and interconnected system. And yesterday I asked the community, what would you like to see? And somebody said, can you please show Doge and can you show silver? You've got it. Let's get into them. Let's have a look at Doge. Now here Doge has been marked up in excess of 3,700 days with level 1 and level 2 standard certification. Let's pop on the indicator. This allows us to see where the structure is inside the market. We can see that we had a bit of a fresh air gap and found support here. I'm just going to put some values on this and I'll just move it across slightly. We can see that the next level of structural resistance starts at that 13,243 and up to 13,348. We would expect a degree of resistance here and some confirmation if we're under a bullish case before we go up to 13,572. Just bear these areas in mind. They are real areas. The sellers are inhabiting them. And if the sellers win, they will push it down to lower levels of structure. If we're anticipating a reversal and a bearish direction, keep your eye on 12,853, 12,763 and 12,542. If you're trading or investing in memes, just keep in mind that Bitcoin controls the meme's fates. It controls the direction. So if Bitcoin is coming down, we expect the memes to get hit. But if Bitcoin is coming up, we expect the memes to come up as well. When we look across, we've just been looking at Doge, and you can see up here, Audis in front, followed by WIF and Pepe and Bonk. And down here, 1000 Sats is starting to roll over, and BOEM is doing a good retracement. Often, what's really sold down can really bounce because there's so many shorts that if price gets turned around, it just tends to liquidate them. And this forces the prices up. Now looking into silver, which was another community request, here silver has been marked up in excess of 81,000 days. These are very solid structural resistance lines and structural support lines. We can see that silver has been maintaining this 2786 level of structural support. Also, we've got lower levels of structural support around that 2750 is really good area. If we get a continued rally up, we would expect 2850 to be a major source of resistance. So please bear that in mind. When you look at silver, it's also a really good idea to look at gold. As with everything, every single chart is moving between structural levels. Let's just throw on the gold structural levels, and this is nearly 70,000 days worth of analysis. By popping on the indicator, and you can mark up your own charts if you learn level 1 and level 2 standard certification, you can see very clearly that gold got above this particular area of once resistance and confirmed it as support. That created this structural level that gold needed to get through. I'll just put on some values for you. Once you understand, the charts are simply moving from structural level to structural level. If it gets above, it's going to the next one. And the next one here was that 2387. And you can see all of this structure just below 2392 was where the sellers were hanging out. They really wanted to push the price down, but they didn't have any success whatsoever. And now we've broken through that 2392. Let's see what's cooking up here. When you get used to these SLs or Stanfield levels, you'll just understand how important they are inside market structure. After we broke out from the 2392 level, we came up to that 2396, which was a lighter level of structural resistance, but above it was the 2400 mark. We've just been flirting with the 2400, but if we get above, there's quite a fresh air gap up to 2415, and then it gets stronger around 2423. Please let me know in the comments, what do you think with gold and silver, because they should be read as simultaneous pairs? Do you think we're going to come back and retest and then break out? Or do you think we're just going to go bearish? Or do you think we'll consolidate? I would be really interested in your opinion on gold and silver. And thank you to Purpuratum yesterday. You might say something like, but Ken, I'm not even trading gold. I don't care what gold is doing. You should. You should really care what gold is doing. Gold gives a window inside the US 2-year and the US 10-year. And you might say, Ken, what the US 2-year and the US 10-year got to do with anything? It's the cost of money. When the cost of money gets higher and higher, that puts pressure on the stock market and also the crypto market because it reduces people's disposable income. Everything is intercorrelated and interconnected. If also yields come down, that means that the interest rates on mortgages and loans comes down as well. Now, what does that mean? People have more money. What do they do with more money? They spend it. So yes, gold and silver are important because they are really real yield dependent. So just please keep an eye on these two. They're very important to track. Another beloved community member said, Ken, can you share the DXY? I wanted to share this on the DXY. Each and every month inside the service, we put out these three-dimensional price paths. These three-dimensional price paths help us to understand, is negative price momentum inside the DXY or inside any of those 32 charts that are covered? Or is it consolidating or is it going up? If the DXY is going up, that's really bad because everything gets more and more expensive, which makes it harder to buy. When it's harder to buy, demand tends to go down and selling pressure tends to come in, which means that the DXY, and especially Bitcoin, is often negatively correlated, which means that if, for example, the DXY is coming down, we would expect Bitcoin to come up. It doesn't always hold, but you need to be aware of these relationships, especially as the mainstream media will tell you it's 100% perfect correlation, but we know that's not the case. And when we look at the DXY through this level 2 standard certification path, and this is where you will actually learn to draw it inside there, this path is telling us that we expected the normalized price path of the DXY to just flatten out in this area, which is exactly what it did. Many people who watch the daily channel are also inside the service. Please let me know if you're in the service, what else could I do to help you out? And when we look at the DXY at the current time, if the FOMC meeting is all about easing interest rates next month, we would expect the 2-year, the 10-year to come down and the DXY to actually follow suit. That could put a lot of positive price momentum into the crypto industry, junk bonds, which would then flow through to the stock market, and we could have a rally on our hands. We need to be careful because the market can wrong foot people all the time. If you want proof, just think about the Ethereum ETF. Just zooming in to that area where the DXY just flatlined, because a few people have asked on the levels of the DXY. You can see these levels were strong structural levels, and if we're going under a negative price path, we would assume that we're going to flatten out here. And you can see we've actually done that. Even government policy can't escape structure. And now we're seeing negative price momentum inside the DXY. If the DXY starts to come down to lower structural levels, it does have a degree of support, but this fall off here could actually just lead to an increase or a spiking up of crypto and asset prices, such as the stock market. Just be aware that we've seen this continuously. So we may not get exactly what people think. We may get a spike down and then it may revert. That's why trading is the bomb. What we know is that there's not a bull market and not a bear market. There's just a borsog market. What is a borsog market? It's a buy on red, sell on green market. If you understand this, you can time the market. Many people say, you can't time the market. Well, with an attitude like that, you must be correct for that person. Be very, very careful about what you think. If you think that you can't time the market, you cannot time the market because your brain will tell you, you can't do it. Therefore, you can't. Let's get a bit of wisdom from Henry Ford. What did he say? Whether you think you can or think you can't, either way, you are correct. You have to have this attitude. I know I can time the market, therefore I can. And you don't listen to people who say, oh, you can't time the market, and technical analysis is like reading tea leaves. We've shown it for years and years. This is the best way to look at where price is going. Yesterday, there was a lot of news that came out of the Bitcoin conference. Why didn't I cover it? Because it was a lot of hype. I wanted you to focus instead on the structure of the market, understanding the market pulse, and that price is the only reality. People typically just get in on good news and lots of stories. They're impatient. They want to make that $1 billion right now. They want to stop working and go lie on a beach. But if you think the financial markets are just like any other thing, you need skill. And when you get skill, when you get a signal focus, when you deal with price as the reality, when you know how all the charts are intercorrelated and interdependent, you just get a different view on the market when you understand the price is always moving in a wave. It's all up and down, and you can draw those paths just like we did for the DXY. And you may say, oh, Ken, but that DXY chart path you just drew. No, I actually drew it at the start of the month. The price will always tell you the truth. The news just sells newspapers, and the newspapers and digital newspapers just sell because of advertisers. And one thing to bear in mind, if you're only looking at the chart that you put money into, you're going to get very, very angry because you're following the crowd, and you don't want to do that. You really need to look more broadly. That's why the Tier 1, Tier 2, and Tier 3 charts exist. You can move from fear into confidence, and you can profit in any market condition, but you've got to think a little bit differently. Just leaving the before and moving into the after will definitely change your life. More importantly, it will change your financial future. It's time for our secret word, which is the way that you let me know that you're up to this part of the video. Please put something with the word borsog in it so I'll know you made it this far. You are awesome. The key is always understanding that those little dotted lines, which are drawn from level 1 and level 2 standard certification, they determine the price waves. If you're coming into a structural support level, that means that you expect price to bounce. If there's been a fresh air gap above it, you may go down 2 or 3 levels depending on the momentum behind that negative move. And it also goes the other way. If you've got a good amount of structural support, your bounce, especially through a positive air gap, could be exceeding different structural resistance levels. So there's a lot to learn. I said I would only do one chart in this video, but we ended up doing many more than that. So please let me know, what particular chart would you like to see the structural levels on in the next video? Okay, have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.